Hello, everyone. Happy Taco Tuesday. How's everyone doing? Retail Sales Taco Tuesday. Good morning, John. Good morning, Kevin. Good morning, Bull Strike Cheat. I haven't forgotten about your email, by the way. I've just been very busy, besides taking a break on Sunday, which I needed. Uh, so, good morning, Patrick. Good morning, Martinez. So we did have retail sales. Sterling, which feed was this from? Breaking. I'm so tired of everybody using the word breaking. It's a scheduled release. Breaking should be something for sudden, like unexpected. Breaking retail sales number came out as you know what? Which one's that from? Because you know what, I'm just wondering who puts. Everybody's using the word like breaking all like for standard stuff like tomorrow breaking. Fed pauses rate cut. Breaking. It was scheduled. Oh boy. Little mini rant this morning. Good morning, Sterling. Thank you for putting in the news, by the way. Good morning, Dean. Good morning, Royal Palms. Yeah, Red Book came out also. Red Book coming in at 5.2 versus 4.7. Good morning, Tony. Good morning, Harold. Good morning, Jacob. Good morning to people in the background. So, it was from Financial Juice. So, Financial Juice is now on the breaking the breaking bandwagon. Oh boy. Oh boy. Good morning, Heinrich. How are you today? All right. Breaking retail sales come out, drop 0.9% versus consensus of 0.5, down from 0.1 prior. Uh, and then you can look at the other numbers. I mean, retail sales down, except the retail sales control group month over month was up a little from consensus. What else? We had Red Book bouncing a little, still hanging in there. We have industrial production coming out at 9:15 Eastern. So in about, what's that? About 9 minutes. Business inventories at 10 a.m. Eastern. And then that's about it. So tomorrow, remember, we have the FOMC and the jobless claims number because we have Juneteenth on Thursday. Yay, Juneteenth. Okay. So far, T-Mobile down. That's actually 4.3%. AMD up. And then we have the mega caps are pulling back after a rally yesterday. We have energy taking a little bounce, although energy did trigger a 4-hour double top, which is still in play. Groups, energy leading, utilities, and then comm services, consumer, cyclical, and financial falling. Yesterday we had a pretty strong rally, at least. It fizzled out during the day. It didn't do much during the U.S. session, but the European session was strong. Still, pause. And I don't understand that. Where was that? You put it in here, didn't you? I saw this too. Where was it? Yeah, there are good reasons to think the Fed would be preparing to cut interest rates this week due to improvements on inflation, if not for a risk of tariffs posed to prices. I don't know why I was talking about that this morning. I mean, I didn't get why he'd post that the day before the Fed meeting. Hello, Charles. So, but it's going to be a positive. They'd shock the markets with a cut, and then if inflation does bounce back, it's still been tame. But some of the stuff behind the scenes has not been as tame as the headline numbers show. Fear and greed, still in greed mode. I still don't get this market momentum. How this is fear mode, coming off these April lows. How is that fear mode? Don't understand. I don't like to look at the fear and greed index, especially when it gets to extreme greed and extreme fear. That's why you put it up there. Schiller PE 3688. In terms of earnings, really nothing. So we don't even have to review that. The only thing this week will be Kroger on Friday that I'm really interested in. All right. So this is also where we'll look at a couple things here. The overall, this is still technically a double top on the continuous contract, and this is technically a 4-hour double top. It's a sloppy one. It's technically a 4-hour. The first and second targets are within the move that started it, technically. And by the way, if this were to trigger, this is the one I'd look at. I look at the targets based off the September contract because that's what you're going to be trading. So use the targets. If this were to trigger on a 4-hour close, and they're probably getting validated before it triggers. I'm just pointing something out for learning. When we have a continuous thing like this, you still have, this is still technically a double. This did not come to the invalidation point. But use the targets on just purely the September contract. That's why when we have roll things, and I'm using a continued contract, not a back adjusted contract, and I'm doing that because of the newsletter we're putting out now. Use the targets on this. So it'd be 59.04 roughly, 58.67, and then the extended target 58.29. Now, separate from that, we're trading right at a very key support level. You see we have a number of dips below here. It is between 60.42 and 60.45. Any dip to there has been bought recently. We got 4-hour cycles getting to the bottom. But you know, in order for me to do anything more sustained bullish, we got to start getting above 60.73. I mean, I'm not going down to the micro patterns. This is not a little valid double bottom, by the way. But you can see any dip below here, below 60.52, I'll be looking around, you know, around where these tails were to see if that support holds. And then on any rally, there's some very strong resistance around 60.75s. So that's what key I'm looking at. Not going to overdo anything today based off the FOMC tomorrow. Retail sales are out of the way. I mean, we saw the going on the Iran, Israel, and I mean Sterling put it in there. You know, Trump hasn't reached out, so we shall see how that unfolds. But that's what I'm looking at today. Nasdaq, you technically still have a double, but again, on this contract, it's also a 4-hour double, and same thing as I just talked about with the ES. 21,377 roughly, 21,282.19 are your first two if it does trigger. Okay, that's really it. By the way, if this were to trigger, I would flip this around. So you see how it's on the aggressive side now? I'd actually use, I don't know if this is going to rotate up and keep it in double territory, and then this side would have to be raised. That's why I have it anchored to this side. But what if this were to trigger, let's say something happened or it were to collapse, these are the targets I would use, 21,427 and 21,295. Now, if this rotates back up, those targets would have to be moved. That's why I still have it anchored to this side because we don't know what it's going to trigger. But that's where I'm still watching the purely September contract for that. All right? Other than that, same thing virtually with the S&P. I'm looking at 22 as very key support on any pullback and very key resistance about 22,100 to 22,120. We had a break above 22,120 before I get anything more bullish. We have to break below 22K before I get anything more bearish. Hey, Christoph, how are you doing? Hopefully I'll remember oil palms. The Dow, nothing to talk about. Russell, roll day in Russell. Remember, roll day in Russell to the September contract. But nothing's really changed. I'm not going to bring up the Russell separate contract. I'm still, the key things I'm looking at are still, if we get above 21.48 on a closing basis, put me in short-term bullish mode to possibly retest the 200 area again. And the breakdown is until below the lows of Friday. Other than that, not much going on. VIX, a little pop-up, still slightly elevated, but won't focus on the bigger sell-off unless we start breaking above, really start breaking above 21 and then accelerate to 22. And if we start breaking below about 20, I'll start looking for at least a choppier potential rally. The DAX, I'm sure people spotted this, completely valid. That's why you get to be patient. Completely valid potential double bottom. You can see it all here also on the daily. Holding against the 50. Now we got the first cross daily rotation zone against it, so it did shift to a lower probability one, but a close above 23,723, and this can be traded on a 4-hour basis. Completely valid there. You have 23,926, 24,027, 24,128 are the targets. The invalidation point for the DAX would be if it trades below 23,191. Now remember, if it trades back down to 23,244, that keeps it in a higher probability. But as long as it doesn't break 23,191, it's still a potential double. The notes, not much to talk about there. It's easier to see the yields. The yields still sitting in this range. So for me, it's sitting on the old yield hands. 30-year still trying to climb, pulling back a little today. I'm just paying attention to yesterday's high and low on the 30-year yield. Dollar index, we do not have a double down there. It's 1, 2, 3. It is a triple, but dollar index rotation zone still down. If we finally get a close above the rotation zone, I'll start sitting up and taking notice. Other than that, there just isn't anything going on in the dollar right now to talk about. The good old crude yesterday triggered this double top, okay? And so far it's gone sideways. This was a potential double bottom right in here between these two bars, turning into a triple right here. All right. So that's where it sits right now. But it is officially triggered. Nothing really with natty gas is up against this very key level. I want to see if it can hold above 381. Above 381, then I'm looking for a target of 4.14 roughly. But this is proven to be very, very strong resistance. You can see how many times right here, the initial bounce back in April. The tops in mid-May, the top at the end of May, the top in June, and now we're trading against there. So I'm still treating this as very key resistance unless we can base and hold above there. Gold, little pullback to the rotation zone and a little key support wedge right here at this 4K. But more interesting today, still gold is still in bullish mode. More interesting today is silver. Still, there is a potential double top in play. It has not traded above 37,395. Don't think it'll trigger. Think it'll probably get invalidated. But that's the only thing that would shift me short term, and I would not be shorting this. I'd be looking for pullbacks at those levels. The next cluster, as it's been on here for a while, is about 37.50, 37.48 to be exact. And we have this little cluster up here between 37.39 and 37.48. Above 37.39 and a half takes the potential double off the table. And again, this just dipped into the rotation zone and rotating back up. So the silver is still in play. The silver coming down just above the prior breakout level, not even getting back to the prior breakout level. Dipping in the rotation zone and rotating back up now. Would not be shorting silver, especially with cycles back to the bottom. Copper still caught back in the range. Nothing to talk about there. The yen, where's my yen? There it is. Nothing to talk about there. Back in a range. Back in the range. You had the little mini head and shoulders, didn't get to the first target, and then done. I'm personally not touching the yen right now, not touching the dollar right now. There's nothing. They're caught in these consolidations, and it's just way, when stuff like that, patterns have lower probabilities. Euro, still a massive potential double top in play, but the trend is still technically up, and there is nothing else to do there. This is still a mini potential double top. This spike was not high enough to invalidate it. So that's the only thing right here with the euro. There is still a mini potential double top. Now, if it rotates back up here, then it's off the table. But that is the only thing. Other than that, the trend is still up also. The spiders, you can see easily on the spiders there is a potential daily double top. Again, not expecting it to trigger unless something really goes haywire in the Mideast. But that would be on a daily close. You can even do a 4-hour close. Completely valid on the 4-hour. That would be on a close below 595.49. Targets 590.69. By the way, this is another one I would shift. See, it's on the aggressive targets. I would shift this to the conservative targets. Okay, we just don't know if this high's in, because even if we popped up here and made a slightly new high above Monday's high, it would still be technically in play. Okay, so we don't know. That's why I'm just giving the aggressive targets. Roughly 590.69, 588.35, 585.90, right at the candle bodies that started the move. This is why I implore you to learn this, and then, because if you were trading this yourself, you'd want to shift the targets. That's why it's important for you to learn. That's why all the rules are out there for the most part, besides some really complex stuff that is don't even worry about it. It's too nuanced. That's why I don't generally cover it. But if it's still valid and you can see the pattern just like on the Qs, completely valid. This is another one I'd shift. If it were to trigger and we didn't make a new high, I'd shift it over to yesterday's high. Okay? We'll just leave it on that one for the time being. 520.91, 518.50, and this one extends into the tails. What else? Good morning, PMG. Thank you for tuning in. We will see, Christoph, about natty gas. It needs to break above there and hold that level. I'm not front running that one. Circle is going to be such an epic shorting opportunity. Yeah, it's yeah, Circle is going to be another one. What rules are good to search? What do you mean? What rules are good to search? If you have questions, maybe I got to do some point a little double seminar. It'd have to be on the weekend, though. It'd probably have to be on a Saturday. I'd live stream it so you could watch it. I'll just cover all the rules again. So maybe we'll get that scheduled coming up, and then everybody's questions can get answered. All right. I've put them out there. You can't search for them. I put them out. I've essentially, we'll do another seminar, okay? We'll do one, and it'll be free. And if people want to do donation or something, because it's, again, I'll have to do it on the weekend. If you want to, do some donation on YouTube, I'd appreciate it, just to cover my time. But, for example, what's Google? The trend is still up. Google watch, there's a nuanced percent beat buy rule. You can watch yesterday's high if we do close above it. Other than that, watch for the 200 area to hold. Now, it still is in the topping area, so anything, I'm still watching for potential long plays in Google. But my first target area is right around this 62.5. Why? Because of the 62.5 rule, and look at the breakdown area. I'm still watching for bullish plays. What will take it off the table for me is if we get back below like this 167.40 area. Okay? Because let me show you the two things I'm looking at. See, we had resistance popping just above it there, but then breaking below it, then reconfirming, turning this into key support. So that's my key support level. So if we broke down and closed back below this, it's taken all bullish plays off the table for me. Other than that, I am still looking for bullish plays in Google or Alphabet. Sorry, I'm going to call it Google until they friggin' change their symbol. I had a talk with Bob, I think it was last Friday, because we were talking about Meta. See, I have no problem calling Meta Meta because Meta changed its symbol. It was Facebook, FB, changing it to Meta, so I can call it Meta. I can't call Alphabet with still a symbol of Google. GOOG, or the Class A shares GOOGL. Okay, cannot call it. I'm still going to call it. I'm still going to call it Google. So, key breakdown area, see right here. Broke back in February, retested the next day, and then sold off. Coming up close. That's why I'm looking at this sort of as a dual area for any targets for longs. I'm looking at least to raise a stop somewhere between 181.58 and 183.58 on any longs. And then it's got to follow through with a close above 183.94. And then I bet you know my targets. They're going to be right around the 75, because you also see here there's a fair amount of prior support. See this area again? This area again. I'm trying to teach something here that you could apply to anything. It's not alphabet specific. But this is an area that I'd be looking to at least, again, raise a stop or unwind some of the position. And then if it can start getting above the 75 and you see this big gap down, then I'd be interested in letting the other part run more substantially. The final part I'd let run more substantially. But since there's multiple key breakdown points here, that's where I have to be more aggressive on raising stops. So, yeah, okay, we'll do it. You know what? Maybe, I don't think I can do it this weekend, but maybe next weekend. Maybe next Saturday. Again, you don't have to attend it live. I do it early, though, for people in Europe, like this. And people on the East Coast can get up. You can start your day. It's not going to be long, maybe 30 minutes at most. It will cover all the basic rules again. All the basic rules. So if we're going to do that, what I'd appreciate is people like Sterling, if you could, again, don't do it now yet, Sterling, but if you could help me find some doubles that you think would be good examples, because I know you really watch for them. And then we could just cover some of them live. If that would be helpful to people. I know it'd be helpful to Bull Strike Cheetah and Royal Palms. All right. So that's where we sit. Bitcoin still have the potential double in place. This little spike up did not invalidate it. Okay? Did not invalidate it because, actually, no, it didn't. It would have to get back above this 109.94 area again to turn it in, because if this spike down, how low it got, that spike up would invalidate it. Thank you, Sterling. Thank you. Hey, how you doing? Good morning to you. Good morning, Rick. All right, that's where we sit. Again, please, it's all going to be news cycle related. I mean, we had industrial. I didn't even, let's see where those numbers came out. Industrial production dropped below consensus. Capacity utilization a little below there. But that's not really market moving. Business inventories isn't going to be really market moving. There's nothing yet left today. Tomorrow morning, even though it's Fed day, we got jobless claims out. So we can get some movement off jobless claims. All right? But I'm not going to be silly. Not going to be silly unless we really get some major momentum. I'll be looking for support resistance trades, like support kind of things, resistance kind of things, unless we break above, can sustain something above this 60, 75 area, then I'd go, okay, maybe we're in rally mode. Or if this support does not hold, then I'll go to minorly bearish mode. But again, with everything that's going on, caught in this range, we had the big ramp up yesterday. Now we're just consolidating. We didn't do much during the U.S. session. This was mostly the European session. Little morning ramp up and then fizzled out. And we haven't done anything. So also from a 4-hour perspective, we've pulled back to the key support. When you look at the bigger picture, key support area, that's what I'm still watching for, the speed support and the bottom of the rotation zone. So if I was going to bracket this also, this would be my key support window, unless that's broken. Speaking of potential doubles, take a look at Hood on the daily. Let's look at Hood. Again, if you don't need to learn 50 patterns. That was a little mini. Look at Hood on the daily. Yeah, this is one of those lopsided ones. Still counts, by the way, lopsided they're about 4 percentage points less. Now what's interesting is this, does this still work? I mean, this is technically the move that started. Yeah, this is the mini move, and at least the first target's within the mini move that started it, so it's fine. But this is the move that started it. So yes, technically that one's still valid. That's the only thing that would shift it to bearish mode. And then it would be the pullback into the weekly rotation zone. Your thing is shorting under 225 on Tesla. Again, this is a valid potential double on under 225. Well, if it gets, I mean, boy, it doesn't, unless you meant 325. Because 325. I'm like 225. You've missed the boat there. All right, yeah, you could under 325 could be a front run. And by the way, again, you got to be careful shorting Tesla, and some people know that in here. But see, under 325, you have this little support wedge there. I needed to follow through and close below this 62.5 harmonic. If I was going to front run anything, I see where you're going with that 325. It would then have to follow with a close below 320 because you also have a clear path move here. Then I'd actually look to unwind a little of the position. And I do this with options, by the way. Around this this is how I personally structure it, around 315. And then if it closed back below 313.30, I'd put something back on to play out the double, because you got an advanced clear path move over here with the gap in play. So, but nothing would have triggered yet for me on the short side, because you have a pretty decent support wedge. You see this support wedge. See, it broke out, came out, formed a support wedge, broke below it, but then back above and retested. So this is a very key support wedge, right around 323.30. All right, so there's your analysis, PMG. Okay, there's a lot to learn from just looking at key support resistance. There's a lot to learn. Too many people look at indicators and forget to look at pure price action. So that's how I would dissect Tesla at the moment. And very key resistance. That's why can't get over anything really overly bullish unless it can get above 332 roughly. And that would only be short-term bullish. Thank you, Charles. Today's volume is terrible, not even trading U.S. session. And again, don't do silly. All right, you're welcome, PMG. I really appreciate everyone tuning in. Thank you so much. It's you listen to me ramble on about silly charts and everything, and I do appreciate. And I'll like Sterling puts in all this information, and people really want to learn. That's what I appreciate. And great questions, you know. And if you do have questions, put them in. That's what it's here for. Let's peek at the. See there. This is why the only thing, and I would not force stuff. Like in here, no man's land. It's sitting on hands. There's nothing to do right now from my perspective. There is nothing to do. Tick. Not even, I mean, that's a pretty negative opening on the tick. Not below 1,000, but below 900. The market didn't even react. So now what I'm going to be watching is if tick rolls over again, I'm going to be watching for those key support levels in the S&P. All right. Okay, everyone. I hope everyone has Ramwell, wonderful song. Wonderful song. All right, everyone. I will see you all tomorrow, non-farm payrolls before the open. And then we got Fed Day. And then Thursday, remember, is a holiday. So I might be here Thursday. We'll see what the futures are doing just because of the conflict in the Mideast. And you have shortened trading on futures. They're still open for partial trading. So, but we'll see. With that, I will talk to everyone later. Bye for now.